Good morning and welcome to Beyond the SEAF model. I'm Jack Kosar and this is effective for May 28th, 2024. Let's get started. A couple of changes up at the top. Our signals for this week are technology, communication services, and consumer staples. Key thing to note about this area here is that technology had a really strong inflow. We'll see this a little bit more in the heat map, but real strong conviction around technology. That is cannot be said necessarily the same for communication services and consumer staples. While they are SEAF signals and they are showing some nice positive momentum, as we'll see a little bit later on the rainbow charts, not as much conviction on these two, though they are nicely rated and are also in the favored territory. So that's good to see. Utilities with a stark drop off, dropping it out of the top three. And we're seeing, life and healthcare would probably be a little bit going too far, but seeing a positive trending in the right direction. Again, I highlight a little bit more on the rainbow chart to show that we haven't seen any major movements on the relative performance versus SPY, but trading week three, technical month eight, and a strategic quarter of 11 has this pretty headed in the right direction. So there may be some life to healthcare to take a look at. Energy, uh, couldn't tell, but cooling off a little bit in terms of the asset outflows. Not quite as strong as we've seen over the last couple of weeks, but still relatively strong outflows. And yeah, heading into our heat map. This is not the heat map that I normally like to see. As we can see here, technology green across the board. Otherwise, we are not seeing that clumping that I normally like to see. That says that we're really trending in the right direction, which I still believe that we're in somewhat of a shotgun approach, as I've kind of mentioned over the last couple of weeks, that managers are a little bit confused by the current set of the market. I think holistically, we believe that we're overextended and continue to be overextended, but making all new highs in the last week or so. Managers are trying to understand where they need to be without getting too far off sides. So again, we're looking at really 2 through 9 being close to zero in terms of its net flows, whether that be positive or negative. We can see this muted green here at number two, communication services at close to 0.1%. That's in conjunction with technology being at 0.51% on that trading week. So this will highlight a little bit more in the relative performance charts that we see in the rainbows. The other thing to note, utilities takes a pretty hard header here with a minus 0.2% outflow, only to be slightly beaten by energy at a minus 0.22% change week over week. Consumer discretionary being at the bottom, being energy really being held up by this strategic quarter at two. And as you can see, the drop off for industrials is pretty stark as well, going 8-9. But as I mentioned, we want to look these things trend a little bit more. Technology really showing off, and then I'll highlight a little bit more on the rainbow charts. But really looking for some of these other sectors to start to catch some momentum, but the flows just really haven't been there. Starting off with utilities, kind of want to show this deep start decline. We had this rise up, went a little bit sideways, and now we're starting to head into our decline with utilities as we have, as you can see here, we've lost some flows on the trading week. Technology on the reverse end, we had this bit of a decline heading in from the beginning of January, starting to slow down, turn a little sideways. Got bottomed out here when a void hit the very bottom and have now slowly started to climb up. We are in highly favored ranking right now with technology as we have a nice trend in relative outperformance kind of starting in the mid to late April and heading into our current period. Technology looking relatively strong. And like I said, those flows are coming in pretty strong as well. So these aren't as much as the rest of the field has been kind of middling in terms of their flows. Technology is showing some real strength that's really playing out in the relative performance chart as well. Healthcare, as I mentioned, not a SEAF signal, still in neutral, close to a void, but seeing some positive trends in terms of the flows, at least going from negative to a bit ever so slightly positive. But the decline in the relative outperformance is stalled, right? So we're definitely at a kind of a sideways pattern here in the relative performance versus SPY. um, having probably to do with the slowing down of outflows to a slight positive flow for this week. I think at a 0.03%, so ever bit zero, but from a couple of weeks in a row where we've had some really strong negative outflows. Healthcare seemingly at very minimum paused. Definitely want to see some stronger flows come in. I will highlight those as they do or don't come in over the next couple of weeks, but healthcare is just a place to watch as we have a little bit of this sideways base that we could potentially build off of if flows start to increase. Nothing, again, nothing here yet. We're a bit zero for this last trading week, but trending in the positive direction as we're not seeing negative flows anymore after some really strong negative outflows for the quarter for healthcare. Looking at consumer staples kind of flirting with this favored where it is a SEAF signal for this week. A little bit of a sideways turn in the relative performance. I think that has to do with a little bit of a weakening flows broadly in terms of outside of conviction of technology. Still favored. Hopefully, be looking for some outperformance and get a couple extra percentage points in terms of inflows coming up. But we're not projecting anything. Favored ranked. Still waiting for the turnaround in relative outperformance, and that should come if we see some stronger flows. Energy, last but not least, our energy friend. Energy having some strong outflows, but they're starting to slow down here. You can see we had this pretty decent decline here as the flows started to kind of rip out of energy, starting to turn a little bit sideways in terms of our ranking, but flows still relatively strong out of energy relating in this downtrend that we're starting to see emerge in the relative outperformance. That is all I have this week. I hope everybody has a wonderful week, and I look forward to breaking down the SEAF model with you all next week. Thanks.